Hello everyone, it's the Canadian Futures Trader here. Welcome to the channel and welcome to the video.
Gotta get more followers.
If you have not already, be sure to subscribe, turn on notifications, get notified every time I put out a brand new video. Guys, today's video, I really do honestly want to make more of these types of videos. Just usually when I'm trading, I'm not thinking about recording my screen and all of that. I just trade away. This one though, I am really glad I got because several of you do ask me, like, how do you trade the treasuries? What are you looking for? And I really only have maybe 4 different setups that I actively look for. I've kind of shown, I want to say it was like a week or 2 ago, I showed some of them, but I really wanted to show this one, and it played out perfectly. This was this week, I can't remember what day, it was either Thursday or Friday. I was able to record it. Now, it's kind of 2 different setups that I look for, but I'm going to focus on one of them that I actually trade, and that's what I'm using. So before I let this video play, this is obviously like recorded. The usual setup, in case you're not familiar with my videos, I trade the Ultrabond. I use Jigsaw Daytradr to trade in. It is primarily a depth of market software package. That is another thing I'm working on more videos, putting together just some Jigsaw videos explaining what it is, how to use it, all the other tools that are available as well in Jigsaw. But that is an aside. So what you're looking at here is on the right-hand side is the Ultrabond. In the middle is the 30-year or ZB, and on the left are the 10-year treasury notes. I primarily trade order flow, and I'm really focusing on relationships between the different products. Now, I typically trade the Ultrabond. Very seldom would I trade the 30-year, and almost never trade the 10-year. But I'm watching the 10 and the 30s for clues as to what might happen with the Ultrabonds. Now, the treasuries tend to trade fairly in step. If they're at their lows, they all tend to be at their lows, and that's going to be my first point here. You see here on the 10 years, they are, just a tick off of their lows of the day. As well, what we're missing here is a little bit of context. You don't get to see what happened up to this point. They had been coming down, pressing the low, going back, pressing the low, going back, pressing the low. The sellers weren't giving up. Really was fully expecting this to eventually crack through. So that's kind of the first thing I was seeing over here on the 10 years. 30 years, same story. Now, again, there are a few ticks off the low, but they're basically hanging out at the lows here, and they had been pressing down. You might see too, now I'm not going to get too much into this, these 2 inside black columns do give you a bit of a clue if you know how to read them, but the fact that this is just big numbers and it's fully down, this means the sellers just took this on a ride down. Same thing here, and honestly, same thing on the Ultrabonds, it's just a lot lighter volume to move it, and there's not as much backticking on the buy side. So sellers are really in control here and have been pushing it down. Doesn't mean it went straight down. There was some backticking, but then they would come down and clear it out and move on with their day. So to get back to my story here, the 30 years are at the low, same thing. Now the Ultrabond, this is where the big opportunity was. Now I'm already in this trade when I started to record, but let me explain what happened. You see here the Ultrabond, I was able to go short at a price of 18. We're nowhere near the low. The low is down here. But knowing what I just said, the treasuries tend to eventually all move in tandem. They've got a lot of distance to make up before they're at their lows. So I'm fully expecting I might be able to make this entire distance up in profit, in ticks. So, and even if I only get some of it, hey, fantastic day. So while these were kind of hanging out here right at their low, but showing every indication that they're going to continue to go low, Ultrabond's trading up here. I said, you know what? I'm going short. If it moves a tick or 2 against me, we're out. We cut the trade and we move on and wait for the next opportunity. But we were able to go short at 18. I'm short for 4 contracts. I have a stop loss set right here at my entry price, so I can't lose on this trade at this point. At worst, I would break even if it flew back on me. And what we're going to see here, it's fairly short. It's 3 minutes, but it's not all trade. There's some extra at the end. Basically, exactly what I kind of just explained plays out. It's kind of the perfect situation where, these are pressing their lows. Every indication they're going to continue to press their lows and fully expecting the Ultrabond to make up this distance. You don't see this every day. Even if you see it once a day, you have to kind of catch it when it happens. They the buyers and sellers get a little bit out of step, or there's lots of different reasons why it could be. They're kind of waiting to see, and that's more the impression I got is Ultrabond traders were waiting to see if like the 10 and the 30 would actually crack their low and go a little bit lower. They do, and as soon as that starts happening, you see the Ultrabond just fly down and catch right up. So I'm going to let this play finally. I know that's a lot of preamble, but that really sets it up. That fully explains the trade. Now it's just about managing the trade that I'm in. I'm already good 3 ticks. At worst, we get taken out for break even. So I'm going to let this play. You see here, and just take note of, say, the 10 years here. They're currently at the 40. They just wiped that price level out. 30 years just wiped their level out. Ultrabond still, they're down, but they still got a lot of distance to go. And I might pause this here if there's any big snaps. But again, you're seeing, look, right at their low, or a tick off. We still have some distance to make here on the Ultrabond. So I'm not moving my stop loss any further. I'm just going to let this continue. Even if this comes back a little bit, I want this to play out to its fullest until I see that the sellers have given up on these other products, and they're not. Remember, it was up at 40, now they're 35s. They cleared those out, now they're down at the 30s. Look at what's happening on the Ultrabond. They went from, I got in at 18, now they're all the way down to 13. I just moved my stop loss, so now that I'm locking in 2 ticks of profit essentially. I'm going to pause this for a sec just because a lot's happening. So you saw the 10s and the 30s crack their lows. The 10 years were at 40. They came down, they touched here. It looks like they backticked a little bit. Same thing here. These guys are right at their low. But we got the movement that we wanted in the Ultrabond. So even if I just got taken out right now, this was a profitable trade. And basically what I am now looking for is when I see the sellers kind of give up on the 10s and the 30s, that's going to be the point where I either flatten this or I move my stop loss right at kind of the current action. That way, if it did by any chance continue to go down, great, we can continue to capitalize. But if it starts to backtick, no, we're just out and we lock in a nice profit. So let me continue to let this play. So I'm focusing more on the 10 years on the far left and the Ultrabond. 30 years kind of that intermediary step, but they're all, they're both kind of doing the same thing here. So, and you see the profit and loss here on the left. That's one of the things I like about the treasuries is, look at where they're at now. Now they're catching up. Okay, so I'm going to pause this again real quick. So these guys went from 40, 35 to 30. A few contracts traded down here, but not much yet. They just hit that price now. 10 years, these are 10 years, 30 years at their low. Ultrabond finally caught up. So in that short amount of time, we're only a minute 21 into this video. I entered this trade just not very long before I started recording, maybe 10 or 20 seconds. So even if it was 30 seconds, that means in a 2-minute period, we got a full movement from price of 18 down to 11, or an $875 profit if I was to get out at this price. So it's why I like trading the treasuries. I still see comments, why you trade the treasuries? They're so slow, they're so boring. Yeah, it's not NQ, but guess what? It's a lot easier to make $875 or $1,000 doing something like this than chasing NQ up and down and all over. If that's your thing, hey, everybody trade what makes sense to them, but I can easily make a case for why the treasuries are a good product to trade. That note, I'm going to let this continue to play. There's not much more to this. I continue to move my, I call it stop. It's a stop loss, but we're not going to take any loss. Right now we're locking in a 4-tick profit. I believe I eventually get out at the price of 12 here. The 10 years over here. Now the 10 years, part of why I don't trade them is they don't move as much, so it is harder to make, bigger amounts of money. I'm going to let this pause for a sec. And the per tick size is lower. It's half the amount over here. It's $15 and 60 something cents. I think it's $6.25, something like that. So it's half the tick value and it doesn't move as much. So far more conservative, and this might be some people's speed. Ultrabond is kind of the fastest moving treasury product. It's why I trade it, but it's still very reasonable. I find this to be a good pace for what I like to manage. If this is a bit too much for people, 30 years, same ticks value, $31.25, but a little bit slower moving. So a general rule, and this again is a very general rule or thought, is that the 30 years tend to move about half as much as the Ultrabond. So for every 2 ticks the Ultrabond moves, the 30 years move 1. It's actually quite vice versa. It's more like every tick the 30 years move, the Ultrabond will make 2. Now that's a general rule. It doesn't. There's no set in stone rule. I'm going to continue to let this play, but just so you know what to look for. I move my stop. I'm trying to think here. I believe, so right now it's down here. It's finally caught up to its low. So honestly, the smart move right now would have been to get this down to 11. I move my stop loss to 12, and it pops up and it hits it, and it takes me out there. Still a $750 winner in about 2 minutes. Not too bad. You know, armchair quarterback, I can always look back and say, you know what, I kind of wish I had just gotten out of this trade right now, lock in, say the 1,000, and then wait and see if these guys continue to press it. But I let it come back on me just a little bit. The video is kind of weird. I'm honestly not quite sure what happens. I set my my stop at 12, and I don't actually see the price tick up to 12. It ticks up to 11. But I get taken out. So I'm not quite, honestly, I didn't look back at my trade history. I'm not sure if it took me out at 12 or it took me out at 11. Bit of the issue with sim and, Rhythmic and all that, you're not always going to get like a fill like you would get a fill in the real world. I'm not actually sitting in the queue, but that's a whole other discussion. And by the way, guys, before I let this play, and I swear I'll let this play and we'll finish out this trade, I am planning on doing a video, just kind of an educational, I guess you'd call it, video about the Ultrabond and about the 30-year. Not so much how to trade it, but just what they are. I find a lot of people, like if I ask most people who are in futures, okay, what is the Ultrabond? What does the contract actually entail? They probably wouldn't know. I think it's interesting to know that stuff. I think it's important for traders to know what they are trading. You certainly don't have to, but nonetheless, look for that video sometime soon. All right, let's continue on. Let's wrap up this, what I would consider amazing trade. So we got right at the low, right at the low. I mean, Ultrabond right now would be at the low. So you're going to see me here move my stop in just a second. Now, at this point, you see here now the buyers are getting a little bit more aggressive. The train ride might be over. This would have actually been a great time if I'd been focusing more on the Ultrabond at this point, trying to decide if I was going to move this. If I'd been looking over here, I probably would have just got out. I would have said, you know what, give me just hit flat, market order, get out the price of 11 and get this. Now I get out the price of 12, fine. It's not a big deal, but hey, every tick counts. So, if we're going to fight for small tick movements, fight for every small tick movement. So the smarter play in retrospect would have been if I'd glanced over here, saw that the buyers were starting to go a little bit more frisky. Not a lot of contracts traded down here at 11, not a lot traded at 25, not a lot traded at 09. So probably should have just locked in the price, but nonetheless, let this play. Still walk away with a fantastic winner. So you're going to see here, I click it down to 12, and there I got filled. Now, no contracts traded at that price. No buyers came up and hit that. So that's why it's a bit of a mystery. When I was watching the video back, I was like, why did that fill? I'm honestly not sure. There is sometimes a lag when I'm screen recording, so it's possible it popped up and hit it. But even if you continue to watch the video, you don't see any contracts trade right here, like within the next few seconds. So not quite sure what happened there, quite honestly. That's basically the trade, guys. So I feel like I need to start naming my trades because one of the people that I learned all of my Ultrabond and treasury trading from is John Grady of No BS Day Trading, and he has several setups and he kind of gives them names, and it makes sense because I'm kind of at the point now where it's like some way to distinguish them. So I would call this the Catchup. Basically, these were at their lows. I was fully expecting the Ultrabond to catch up to them, and it did. So looking at the screen as it is right now. So say I just walked in and this is the exact point when I turned my screen on and started looking at trades. Had no idea what had happened the last 2 minutes. I would say, yep, this is a normal day. All 3 products are trading right at their lows. Where that opportunity was when all these 2 were at their lows, and this one was somewhere up here. I got in at a price of 18 and wrote it down to 12. Could have got even further. So there's lots of opportunity like that. You have to be patient. You have to wait. Situations like this don't come up that often, but I mean, I do say they would come up, like once a day possibly, or every other day. I see something like this happen, you capitalize on it, and there's great returns, and you know when to get out. If I had gone short here and the price moved a tick or two against me, we're done. I mean, that's the sign. Okay, the train ride, I'd missed the train ride. Train ride was over. If anything, that would be the point where maybe it was time to go long on one of these other products and see if it's going to come back up. And now they're going to catch up to the Ultrabond. So I will leave you with that, guys. Hopefully that explains a little bit of the methodology and thought process behind at least this specific Ultrabond trade. I hope to do some more in the future of some of the other setups, maybe do some reviews of some other trades, even if they're the same type of setup, just to show it in action on a different day in a different situation and show that, you know what, it's not a one-time thing. It wasn't luck. It's something that you can actually look for. If you wait for it, you're patient, it will show up and it's time to capitalize on it. With that, guys, I'm going to leave you with that video. Feel free to rewatch it. Thanks so much for watching, and I'll see you in the next video.